Good morning, everyone. This is a follow-up or a part two video. It's 9:37, so it was about 15 minutes ago, roughly, that I recorded the previous video. Finally, doing more frequent videos. It's been since last year since I did my last video. Anyway, I was mentioning why I chose CrowdStrike. Okay, this is the ticker symbol CRWD. So this is the Investors Business Daily IBD 50 stock list. IBD is a rival, if you will, to the Wall Street Journal. They're based in LA. And I first heard about them in 2009. No, actually, no, I'm sorry. I heard about them back in 2001, roughly. And my friend worked there. I thought, oh, this is for people that don't trade. This is for people that don't have a finance degree. And so I ignored it. And regretfully, I missed out on a lot of years of opportunity. But I revisited the whole idea again in 2009. I met the, at the time, CEO and founder, Bill O'Neill, received his book. Everyone at his lecture received his book. And it's called How to Make Money in Stocks by William J. O'Neill. It's either an orange book or a green book, depending on what version you have. And it's a long read. It's about 400 pages, at least the orange book is. There are about 100 pages of charts, and the rest is on the CAN SLIM method. The CAN SLIM method, it's an acronym. So obviously that means each letter stands for something. C is current earnings, earnings per share. A, annual earnings. N is new, meaning new management, new products, new services, something new, innovation. S is for sales. L is for leaders versus laggards. So the Investors Business Daily and the book, it breaks things into sectors and into industries. So if the company is a leader in the industry and the industry is a leading industry, those are strong factors. The I is institutional buying. The market's not moved by smaller traders, people like you and me or our next door neighbor. It's moved by the institutions, the hedge funds, the banks. They have the billions and trillions of dollars. And then M is the overall market. What's the overall market doing? The overall market doesn't guarantee that the underlying stock's going to move that direction, but it's more likely, about 75% or so of the stocks will move that direction. So you want to have as many factors as possible helping you. And then the charts will get into the timing of the market. Not just buy it because it's on the list, but when to do it. So with CrowdStrike, and I'll be honest with you and transparent, I actually mistimed this. I decided to do this anyway. And so this could be possibly extended, meaning maybe it's gone up too fast in too short of a time. It might pull back a little bit, which, it is what it is, but that's why I'm only risking just over $100 because of that. So if you look on this list, this is ranked number one, this is ranked number two, and it goes down to 50. Okay. So shout out to Marcel Vargas. He's a new friend of mine. He's in my mentorship group, and he lives in LA, so about 45 minutes from me. He's the first person and only person that I know that's read my book. It's actually not even my book. I apologize. It's Bill O'Neill's book, but it's a book that I recommend a lot of people to read, and no one seems to be serious enough to do it. So, but Marcel was, and he's listened to the audio, I think he said 4 times now, and he's going to reread the book again and again. I read it 4 times, but it's been a while, so it never hurts to brush up and reread. You never have 100% retention, so rereading is a good thing. Anyway, when you look at this, earnings per share, percentage change, It's over 100% increase versus the last earnings per share. Sales is over 35% change. So that's strong. Also, the reason I didn't choose this one is because I like stocks that are higher priced. If they're lower priced, when I say lower priced, I mean under $50 a share, is usually they're low priced for a reason. They're either a startup, something happened in the past and they're recovering. So I like something that's a little bit higher in price. Anyway, I'm going to click here. I'm going to show you the chart that's built in to the subscription that I have. Okay, this isn't as detailed, but at least it gives you some visual. All right, so you see everything's trending upward. Okay, so right here, it broke a new high. So this is obviously today. Yesterday was a big move. Unfortunately, I missed that, but it is what it is. So I would have made a good return in the last 48 hours. But there's always more opportunity. Always remember that. If you miss something, don't fret. There's going to be another opportunity. There always is. Okay, just a matter of being patient or um, doing more research. So when I say extended, it's kind of gone up very aggressively. However, doesn't mean it's not going to continue going up, but a lot of times there's some profit taking here. All right, and then another thing quickly before I end this video is EPS rating. 99 is the highest EPS rating that the Investors Business Daily gives a stock. So at 99, you can't really get better than that on the earnings per share rating. So that's a strong fundamental, and we'll see how it plays out. We have about a month and a half to see what happens, and if it pulls back, then it is what it is, $105 or so at risk. No problem. If it goes higher, of course, I'm going to wish I would have done a ton of these trades. Anyway, thank you for watching. I hope this helps, and we'll have more content soon. Have a wonderful day, and again, happy belated New Year.